How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus Japanese yen. Now, I do apologize. We haven't updated ourselves here, I believe, in the last 2 days. So the last update was on Friday, and we talked about how a lot of the yen crosses had rated sell-side liquidity and looked to be purging buy-side and continue going up for that false break. So getting retail traders to go short while the market makers prepare their longs. And you can see that happens here essentially for AJ. You can see our price comes down below the open, taps into that IPTA look back 60-day low, and then runs higher. So the best buying opportunity was definitely down here. Not saying all traders would have caught that, but we know definitely the market makers caught this as a buying opportunity. They're buying below the open and after breaking swing lows. So it's ideal to buy after breaking lows if you have that sentiment in mind that you're going to be bullish. We also talked about how at this point on Friday, if we were to get a down close day, I will look to seek buying opportunities. The next day, Monday, we got a down close candle. So that means we would buy the following day. And how would we buy? We would buy at that candle's close and open. So we use a buy stop and a buy limit. So we're buying on weakness with the buy limit, and then we're buying on strength with the buy stop and looking for price to go higher. We can see here today, Tuesday, it did complete that. Now, the daily candle just opened not too long ago, a couple hours ago, for the Wednesday candle. It's still Tuesday, right here in New York, because I live in New York. It's still Tuesday, but the daily candle has already started forming. I would like to see Wednesday continue to trend higher. Though we do have that formula, right, for bearish price action or bearish trend formula, price breaking a swing low and getting a lower swing high, this lower swing high is not confirmed. And what do I mean by that? Meaning, even though in theory this is a lower swing high, right? The point between two candles, the highest point here, that's the swing point. Its low isn't broken, so it's not confirmed. So that's something I learned in Larry Williams' book, him speaking about confirming those swing points. And that's a very big difference, and I believe it allows me to filter out a lot of mistakes that I might have taken, and jumping into this and saying, oh, it's outright going to be bearish. But waiting for that confirmation, waiting for this low to be broken, then I would potentially go short. As of right now, I am using my knowledge of other, intermarket analysis, like looking at GJ, looking at Swiss J, looking at CAD J, looking at EJ, GJ, and I'm looking at those yen crosses, even NJ. I'm looking at them as, okay, what are they doing as well? Because all the yen crosses are correlated. If they are going down, they're all going to go down. If one is going up, they're all going to go up. That's generally speaking the market code. And we can see how AJ printed that down candle and we look to buy after it. So I want to see price get away from this down candle if it's going to trend higher. I want to see if the market makers have already positioned themselves net long below February's opening price and want to raid buy side now. So I want to see price create sell side liquidity, but raid buy side liquidity and continue to trend higher away from this down candle. It's still not out of sight that we could still be bearish, because if price decides to turn around and confirm a lower swing high, then I would switch my sentiment to being bearish. But as of right now, I'm still leaning more bullish. In recent time, I believe yesterday, the RBA had this interest rate decision, the Reserve Bank of Australia. They didn't change their rate. It's still the same. So they didn't increase it or decrease it. It's still the same, but it's still a interest rate differential that's huge between the BOJ, the Bank of Japan. So in the long term, we can say that Australian dollar would definitely outcompete Japanese yen. The investors are most likely wanting to hold Australian dollars rather than Japanese yen. Hopefully you find this insightful. Peace.